Welcome to Silver Bar Stacker, folks. I hope everybody's doing well and enjoying their Sunday, if you can even call it that. That's right, folks. It is the end of Sunday, and in most cases, for most people, not even Sunday anymore by the time I get this video up. But we got to stick to the routines, and here we are again. It's been quite a busy weekend, to say the least. Very, very eventful, for better or for worse. And I've just been scrambling today, actually, to do a few things, actually. So one thing is that I've kind of gone through the entire website and I've updated pricing on everything, which is great. Another thing is that we've got a really, really interesting blog post that we've put up. One of my business partners took a lot of time to kind of put that together, and I'm very excited to kind of go over that. That's actually what we're going to be doing today. We're going to be taking a look at that blog post here in depth for the first time together. This is actually published here on the silverbarstacker.com website. It's the latest blog post that we've got up, and it's actually essentially a historical comparison of the prices of gold and silver, and sort of kind of taking a deeper look at how these both of these assets sort of have performed as investments. If you can look at gold and silver as investments, a lot of people don't look at them as investments, but many people do. So looking at gold and silver in the perspective as, hey, is this a good investment, in the sense that, like, hey, can I buy it and then sell it for a profit? Or can I buy it and then sell it for and obtain more value than I otherwise could have? That's an interesting thing to consider, and to be truthful, it actually varies quite a bit, historically speaking, right? And many individuals will say that, hey, gold is a better store of value, and that would be based off of kind of historically speaking. It is kind of have been a better store of value, a great store of value, and perhaps some could look at it as a great investment even as well. And we'll take a look about why I'm saying that. And others could say that, hey, maybe silver is not just not an investment, but it's a bad investment, some could say, and that could be based off historical trend data. Or if you're looking at two other time frames, maybe you could say, hey, no, it was a great investment, right? If you're looking at the tail end of the 80s and you sold at the right time, hey, maybe just like people who sold at BTC peak or something like that, hey, maybe it was a great investment for them. So we're going to take a look at that briefly, and if anybody else is interested in taking what we're talking about, taking a look at that a little bit more in depth, we got a nice in-depth blog post. It's probably about a 15-minute read, and you can go ahead and check that out here on the Silver Bar Stacker website. So I'm excited to go ahead and get through that blog post that we've sort of put together, and it'll be really nice to kind of go through that and pose these questions together, because this is not really the type of content that you generally see me speaking about. This is sort of something you might see spoken about, hey, maybe on like Salvate Metal or Savage Stack, or somebody like that might be talking something about this. But I thought this was a very interesting read, and to be truthful, I haven't even written this article, so it was my business partner who wrote this, because this is kind of more aligned with his expertise. Kind of, he's more the web design type of person as well as the technical analysis type person. So it'll be interesting to kind of take a read at this. Now, the image that you see here, this is actually zoomed in, but if you actually look back at this image that you see here, where you've got all these Engelhard kilo gold bars and then a couple Prospector rounds there as well, well, that meme, or if you want to call it a meme, that little image there, I actually put that together, and that was something that I was sort of thinking about, and what prompted my buddy to actually put this article together. So we kind of tag teamed on the idea here, and then my buddy was the one who was able to sort of get a really nice cohesive article here that we're going to be taking a closer look at here. So this image, let's start with this image that I'm talking about. Now, this image, if we zoom out, initially a few weeks back, maybe on my social media pages, I had shared an image where essentially we were talking about how has gold performed over from the 1920s to kind of like the present time or whatever. Okay, and so the argument was that what I posted on the image, and that was actually a misleading image, and so that's why I wanted to actually also revisit that image as well. But the initial image that I posted was actually faulty, because what that was showcasing was 10 kilo Engelhard bars, which at that time was the equivalent of the house that you could buy, an average house that you could buy. So around that time, I don't know how much a house cost, like $8,000 or something like that. And at that time, whatever the price of a kilo of gold was, if you could get 10 kilos of gold, you could swap that for an average sized home back in the 1920s. So 10 kilos of gold was the equivalent value of an average sized home, which is kind of basically people's basic necessity. Every single person's basic need and their biggest expense is going to be their home, their mortgage, their rent, whatever, right? All that, property taxes. That makes up a bulk of your liabilities. And then once you've got that taken care of, then you've got food, which is a minor expense usually compared to your housing if you're eating sustainably and if you have a average sized housing payment, right? So 10 kilos of gold, that's not something most people have. I certainly don't have 10 kilos of gold. So that's a lot of kilos of gold that you have to save up to swap for a house. But I guess the argument that I was making in that image, which was faulty, was that, hey, 10 kilos will get you an average sized home in 1920, and 10 kilos of gold today will get you an average sized home in 2023. That's actually faulty, though. That's impressive. It's kind of like, hey, cool. Gold is truly a store of value. That's the definition of a store of value. If you literally can trade that for the same amount of value over after 100 years, that's crazy, right? So that's very impressive. But in reality, gold is not just a good store of value if you're looking at that 100-year time frame. If you're looking at that 100-year time frame, then gold is a great investment. Not just a great store of value, but a great investment, because I was wrong. When I actually did the calculation, well, 10 kilos of gold, I mean, that's probably going to cost you like 60 grand a kilo, roughly. I don't know. I don't buy kilos of gold all the time, but I'm assuming that it's probably like 60 grand a kilo if you're buying a kilo of gold. And if you buy 10 of them, that's like $600,000. Well, yeah, maybe in California, you might, $600,000 might be a bargain on a house, but that's not truly, that's a lot of land, right? In normal land, $600,000 is not an average size home. That's a mansion most places. So an average size home nowadays is probably around 400 to 500,000, right? That's probably an average size home, which is kind of crazy because, usually that's wouldn't be considered that back in the day, but things are moving fast. So right now, probably an average size home is closer to 450,000, right? So actually, you could probably get away with just 6 kilos of gold to swap out for an average size home now, which means that gold has actually performed better than housing, right? Gold has performed better than housing. If you're people can argue this one way or the other, but technically, it would have been better for you to put that money in gold, because you could have walked away and had 4 extra kilos of gold and then just bought the house now. Swapped 6 kilos, and you could have sat on 10 kilos of gold for this 100 years if you were still alive, and then you could, and if time is not of any value to you, and then now you could buy your home. After all patiently waiting, you can buy your home now, swap out 6 of those 10 kilos, and then you'd have 4 kilos of gold that you could sit on and enjoy your average sized home. So that means, if you're looking at that 100-year period, that gold actually is a great investment and actually outperformed housing, outperformed probably a lot of things, okay? Now, if you look at silver, I was thinking about the same thing. I was like, well, why don't we look at silver over that same period of time? Look at the pricing of silver, look at, let's look at the same period of time. And so I kind of tried to do a rough calculation. I mean, this is not an exact calculation because I kind of was comparing Engelhard kilos and Engelhard prospectors, and so maybe I was inflating the price, maybe a little bit of my silver rounds, or maybe deflating the price. But regardless, roughly speaking, I was thinking, okay, and also it's funny because these Engelhard bars and these Engelhard rounds didn't exist in 1920, so it's funny to be comparing this is another funny thing to point out. But regardless, when I did the comparison of silver is not just not a good store of value, and it's not just a good investment. It is actually just a bad investment if you're looking at that 100-year period, right? So I'm not going to say that, hey, go sell all your silver now, because, hey, someone might turn around and argue now, hey, well, because it's performed so poorly and so manipulated and so rugged down to the ground, well, now that's the best time to buy. So somebody might make that argument that, hey, it's so undervalued now. So let's not jump to that conclusion and have that go down that rabbit hole conversation. I'm just saying that if we're looking at this 100-year period, and we're talking about from 1920 to the present time, 2023, last year, well, you could start off with about, I think, 10,000 Prospector rounds or 1-ounce rounds, and you could swap that for a house. 10,000 1-ounce rounds is quite a bit of rounds. Not most people have 10,000 1-ounce rounds or 10,000 ounces of silver laying around, but you could probably swap that out for an average size home, okay, which is pretty cool. Now, if you wanted to buy an average size home now, that $450,000 home or whatever, if you wanted to buy that now, well, I think that's going to be around like 16. Somebody can do the math. Maybe I'm off by a couple thousand here and there, plus or minus, but it's probably closer to like 16,000. Okay, somebody's probably going to go onto that thing that I posted, the thumbnail that I posted, or the image that I posted on social media, and correct me and say, oh, SBS, blah 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 blah. It's wrong. Hey, it's a rough guess, but I certainly think that you are going to need more silver rounds now to swap out for an average size home. And so my thing is, it's like at least 50-60% more. Right? So you start off with 10,000 swapping out for an average size home, and now instead of having rounds left over, now you got to come up with another 6,000 ounces of silver to swap out for a home. That means that not only is silver not performing better than gold, it's performing the opposite of gold over that 100-year period, but in fact, it's performing worse than housing. It would have been better for you to buy gold, it would have been better for you to buy a house, and it would have been stupid of you to buy silver. So that's why maybe you have a lot of bitter, old grandpa silver stackers who are just kind of like really, really sad because they've been dealing with 100 years of hurt, right? And they're waiting for the turnaround, and the turnaround's not coming. But the turnaround may come. So we'll see. We'll see about that. So that's really the question for today. Is silver really the better buy? And that's what prompted this entire blog post. Now, I'm not going to bore you with this entire blog post and run through, this word for word, but I'm going to kind of go through the highlights. I myself haven't read it in depth, and I'm going to be reading this a few times over to kind of really digest it all, but it'll be interesting to kind of take a look at. So we've kind of talked a little bit about what the general idea about this article was, right? Gold and silver are two of the oldest, most valuable metals in history. Everybody knows that they've been used across everything from coinage, every freaking thing. Especially silver is heavily used in the industry. So that's nothing nothing surprising to anybody. But what is surprising, and was very surprising to me when I was looking at this write-up, was all these different periods of time where the performance of gold and silver has drastically varied, right? And it's been not manipulated, but it's been changed up and down based off of many, many different types of factors, right? So you have these eras historically since the 1850s. You've seen these ups and downs in gold and silver price, and this is all based off of multiple factors happening here in society. And so you'll see these common recurring themes here: the gold standard era, the Great Depression era, the Bretton Woods era, the 1970s era, the 2000s era, and then we also even have our current COVID era. That also created a lot of ups and downs here in the gold and silver prices, right? So there's a lot of money to be made, a lot of money not to be made, a lot of money to be lost, a lot of money to be just sitting there, right, while you're twiddling your thumbs during these periods of time. And so it's interesting. If you want to take a closer look at what has happened historically, this kind of gives you a play-by-play since the 1850s, what has happened. And it'll give you the ability to track the price. And your mind might be boggled about what the prices were during some of these periods of time. But it's very, very interesting how different societal factors will impact your silver and gold prices. And timing is everything sometimes, right? But how can you time the market? Sometimes, in most of these cases, many times you can't see it coming. And a lot of times many people are shouting, hey, this is coming, and nobody listens. So these certain decades and eras of time, these time periods, we keep kind of coming back to these in this article. We keep talking about these. We kind of go more and more in depth about these different time periods. And this was one of the most fascinating charts that I saw. This is what I was very happy when I read this. I was like, wow, you've blown me away with this article, because this is so telling, right? You've got your gold return over these historical periods. Here you are on a gold standard, right? So that's why it's 0%. But silver going up and down drastically. You don't know if it's a good investment or not. Sometimes you're making 10%, sometimes you're losing 11%, sometimes you're making back that 8%. So just up and down like a roller coaster. Very unpredictable. Whereas gold overall performs well in the sense of it usually preserves your value at the very least, and in many cases will perform a little bit better than that. So it's very, very interesting. Now, outside of these different eras, you have all these different factors, and a lot of these factors are embedded within these eras, right? So a lot of these factors that influence the gold and silver prices are recurring. They commonly recur, and so a lot of analysts will predict these things happening because they're kind of run on cycles a lot of times, right? So you got inflation and deflation, you got interest rates and monetary policy. A lot of this stuff we're seeing very, very recently, and a lot of this stuff has happened recurring over and over and over again. Fiscal policy and geopolitical events, I mean, this is all commonly recurring stuff. Industrial demand and investment demand. And we're seeing, we see more industrial demand, for example, with solar panels. That's an easy one. That's one that everybody talks about all the time. Oh yeah, more solar, more electric, blah, blah, blah. All these cars use all these silver components, etc., right? So then you've got advantages and disadvantages of investing in gold and silver. Well, we don't need to go into the details about that, but one thing I can say for sure is that, hey, historically, gold might have been a great place to put your money, but hey, maybe that means it's overvalued now. So maybe you want to throw all your money out of gold now. I'm just kidding. I'm not saying that. I'm just saying that you have to consider all these different factors. History doesn't always repeat itself, etc., right? And so since history doesn't always repeat itself and silver has been a shitty investment over the past 100 years, maybe now it's different. Maybe all these 100 years has been manipulated down to the ground. Meanwhile, gold has been going up, and so now maybe this is the best time than other before the bubble bursts to stock up on silver. Who knows, right? Nobody knows, but these are all things to kind of consider. Advantages and disadvantages of investing in gold and silver. Liquidity, right? So I don't know what that means, but let's read that. Liquidity is the ease and speed. I know what liquidity means. I mean, that's how easy something is to kind of access and how available it is on the markets, right? So if something's low liquid, like Engelhard's can be very low liquid, especially the very rare ones. Very few of them on the market, so it's low liquid. Something is more high liquid if you got more common Engelhard, right? Or if you got generic buffaloes are very liquid. You got very, very many of them, very easy to sell. You can buy them cheap, sell them cheap, move them in bulk, sell them easily, etc. Got to do a little bit more work when you're working with the more specialized stuff, the more low liquid stuff. I don't know what this means. Your gold and silver are highly liquid assets, as they can be easily bought and sold in the global market. This makes them convenient and flexible for investors who need access to funds quickly. Yes, but you got to also consider, hey, sometimes more collectible stuff is less liquid. So, blah, 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 blah. Diversification. What do we got here for diversification? Diversification is a strategy, blah, 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 blah. Yeah, well, we know. Diversification, hedging, right? These are things that you do with gold and silver. You want to put your money in a different asset class. Gold and silver is a great one. Opportunity cost. Opportunity cost is the value next to the best alternative. Now, opportunity cost is a good one. Opportunity cost, when you're talking about the opportunity cost from the 1920s to the current present time. Well, opportunity cost can be calculated when you're comparing buying 10 kilos of gold versus buying a house, an average size house. Maybe somebody will say that, hey, no, it's better for me to buy the average size house. Screw the extra 4 kilos of gold I could pocket after 100 years because I'd be dead after 90, right? And nobody's going to take my house after that. So maybe to that person, it's more important to just get the damn house, right? So you have to think about that opportunity cost, right? How important is just 10 kilos chunks of gold, right? Then you also have to think about the opportunity cost when you're comparing like silver to any of these other investments, buying the house for yourself or even as an investment, which is a terrible idea if you don't have your own house. But buying the real estate or buying the gold, opportunity cost, I mean, you just lost out big time there. You had a much better opportunity buying the house gold. So your next best alternative, well, that was your worst alternative, was buying silver. So that's just something to think about. I mean, I've been actively trying to shed my other non-silver reserves and stock up on more silver, and it's just telling when you think about historically over and over and over again, just silver getting slammed to the ground. It's something to think about. Current and future outlook for gold and silver. COVID, pandemic, fiscal, monetary stimulus, geopolitical tensions and conflicts. These are all things that you can go onto the silverbarstacker.com website and read about. Okay, so I'm hoping you enjoyed this little blog post that we put together here at Silver Bar Stacker. And of course, we do have an auction that we're going to do, and I think I'm going to just do a massive auction. I have a humongous basket of stuff here, and this is quite a deep basket, so it goes very, very deep. And so I think I'm just going to run a very big auction today, because truthfully what I've been doing all day, and the reason that I'm so late on this video, is because I've been improving my prices on as much as I possibly can. So I've gone through probably 50 to 100 items of the commonly sold items, not a lot of the rare stuff, but at least the stuff that kind of sells, the higher liquid stuff, not the low liquid stuff, the high liquid stuff. So all your prospectors, everything. I've kind of assessed the market and kind of updated my pricing on everything. So right now the pricing is very, very good on pretty much everything, at least on all these items that you see here. If you see any items, it's hard to see everything here, but every single item that you see here, I've actively updated the pricing just today. So go ahead and take a look at the pricing there, and you'll find that it's very, very favorable and a very good price, especially if you're one of our monthly subscribers, where you're getting the 5, 10, or 15% off of your purchase. Then it's a crazy killer deal. But even without that, you'll find that if you're looking for specific vintage pieces, the stuff that you see here right now is priced incredibly well. So if you're looking, and let me give you a tip before we head on to the Whatnot auction, let me give you a tip here. As far as 10-ounce Engelhard bars go, we didn't update the pricing on the JM bars, so maybe you might be able to find some better pricing on the JM bars, but we did the JM 10-ounce bars, but we did update the pricing on the a couple of our higher stock Engelhard 10-ounce bars, and that's what you're seeing in front of us. It's going to be your Big E logo bar and also your frosted back bar. Those are the best priced bars, meaning that they've been marked down the highest percentage from their normal price. And because that's because we've got duplicates of it, got quite a few duplicates of them. So if you're looking for to add an Engelhard 10-ounce bar to your stack, some of them are kind of pricey right now, just based off of the stock, but they're actually all priced competitively well. But these ones were actively updated on pricing today. So this one's, I think, $355. This is a 50,000 minted frosted back bar. It's a nice chunky McChunkerson. So there's a 50,000 minted bar. I think we've got this priced at $355 right now. And the E logo bars, this is going to be your most common 10-ounce bar. The iconic E logo bar, there's a 450,000 minted bar. This one we've got priced at $325, and we actually have our random design Engelhard bars priced at $315. So that's a killer deal in my opinion. $315 is a very, very good deal, and I'm very happy to be able to offer some of this good pricing, because we got access to a new wholesaler who does have access to some of the more common vintage stuff by JM and Engelhard that we like to supply and that we sell and buy very, very frequently. Engelhard and Johnson Matthey is what we really specialize in. So everything you see in here, a vast majority of it is, you see a little bit of Geiger and Volcambi, but I would say about 90% to 95% of this stuff that you see here is going to be Engelhard and Johnson Matthey. So all the common stuff we actually updated pricing on. So all the Prospector rounds, whichever year you want, including the key date 1983 right now, we reduced the price of that down to the best price that you'll see right now. I think it's like $95 or so right now. So go ahead and check out the website. You won't be disappointed. And pick yourself up some nice vintage, but we still have it available at a price. And on top of that, what else do we got going on? We've got our Whatnot auction about to go on. So all the stuff that you see here, I'm at least going to auction off one of each of these if I can. And I've got duplicates of everything here. So if people are interested in things, I've got everything updated, updated the pricing of everything on Whatnot as well. So we've got the Whatnot buy it now listings available, all at the same price that you find them on the website. And so go ahead on the website and buy them there, or join us on the auction here on Whatnot and add some buy it nows to any of your auction wins. Hope to see you there. I'm very, very excited to have been able to go through this blog post. I'm pretty excited about it. I thought it was a very interesting read, and I hope you did too. And thank you so much for tuning in. Love you all. Cheers. Hey.